Everyone. Welcome to All In on Real Estate. I'm your host, Aaron Goins. I started this meetup because when I was in the military, no one in my circles talked about real estate. A lot of times we talked about debt and other financing, but nothing about real estate. And I want to have a meetup where people can understand the nuances of real estate and build generational wealth for them and their families. So I'm very, very excited for our topic today. And I'm very excited to have my co-host, Mr. Marc Cesar, coming on to help with this conversation. And the conversation is, why don't more people syndicate? I think I see the power of syndication by being in real estate, but it's not just in real estate. It evolves into life as well. Why don't more people syndicate? Why don't more functions syndicate? I know there's various opinions on it. So I want to have an open forum and just have some conversation going. Instead of having a guest speaker every week, I wanted to have something a little bit different and have this open forum conversation. So everybody's welcome to talk and, just voice your opinion. There's no dumb answers on this one at all. So let's get started. So let me just go around the room. We've got a lot of people in this room, so let's go around the room. Mark, keep on coming back out. But David, man, how you doing, man? Welcome back. And let me ask you this: why you don't think people syndicate enough?
Two reasons. One, the upfront cost. Two, the lack of knowledge or understanding.
Yeah, I find that real interesting. That I find it interesting because I think people who don't have the knowledge should try to seek for others, and a lot of times they might go to a guru or something like that, and the guru will say, "Hey, I'm gonna take half your payments," and somebody's like, "No, I don't want that." But it's a process. If you don't know, you're gonna need people around you to help you out with the process. So right. I find that real interesting about.
Most people don't even know what the term is or have heard the term.
That's true. That's very, very true. That's very, very true.
Where do you see upfront cost?
Well, most syndications involve a securities attorney. Isn't that between $15,000 and $30,000?
Yeah. Oh, okay. Okay.
The third thing is I think most syndications are working with accredited investors, and so anybody who's not an accredited investor is typically doesn't have access to it.
Well, but like I said, I mean, it's not just real estate. I mean, this in life. I don't think enough people want to syndicate in things. I think part of it's control. I don't want to give up control for what it is. What you think, Mark? You can run it. I mean, you my co-host. So what you think?
So I'm sorry, I jumped on a little late. What was your initial question?
Why don't I mean? It was going back to the main topic, and I was saying, is it control with this? David said that people have a lack of knowledge, and that syndication might have accredited investors and things like that. But is it control? I mean, do you think people just don't want to lose control of what they found or anything like that? Cole's saying lack of trust and control.
I think she actually just took those words right out of my mouth. It varies it's subjective to who the individual is. Thank you, Nicole. I appreciate you for answering for me.
Thumbs up.
But yeah, I think it's subjective to the individual. It can be a control issue. Of course, people want to feel like I want to lead it. So if they're in the lead, then they're the head honchos. They call all the shots, they do what they want to do. And of course, like Nicole alluded to, it's a trust factor as well. I personally believe that, a lot of people just in this space just don't trust. The trust factor is there, especially if, you're working with somebody that you may not know, or, you're bringing somebody that you're not really fond of in a sense, that can kind of play a factor as well. So it's again, it's subjective to the individual, in my opinion.
Anybody can add on to it. So this is open forum. Anybody can add on to it. We just me and Mark are just hosting it, but anybody can add on to it.
Hi, I'm Svi. It's my first time here. Is it okay if I chime in?
Absolutely,
Thank
absolutely.
you so much for having me here. One of my friends who's also in real estate sent me the link. So I'm grateful to him and grateful to you guys for having me. I'm guessing I guess my first question is, are you asking why most people don't participate in syndications or why most people don't organize the syndication or both?
Both.
Okay, so I mean, to participate in the syndication, you just need to have the liquidity. You need to have the money. Not everyone has it. Some people do, some people don't. And to organize the syndication, you need to have expertise. That means in due diligence, asset management, the right banking relationships, and it's not simple to organize the syndication at all. So I think that's would is, and you need to have the expertise in a particular market to just know the market and buy right, finance it right, manage it right, and you have to be able to have the credibility that will enable you to raise the equity that that people should trust you with their money. I guess that would be my guess why most people don't organize it. Why many people don't organize it.
What you think, Robert?
Yeah, I was gonna say, to add in on what he's saying is they just don't have the team, the proper team around them, or just having that proper team, how people need to get involved with the syndication process. Doesn't it include your capital raiser, then your general partners, even having the proper CRM to get things out there. Once you start, you find the property and all these other things that go into it. So I think that's what it is, a lack of expertise team that you build to get involved with that.
I mean, in all honesty, putting a team together is not that hard. If you know your strength and what you're bringing to the table, you have a solid deal, you can easily put a team together. I mean, I've seen it done. It's not difficult. Now, if you're talking about someone brand new who's, just jumped into the space and, just learned about syndication yesterday, I would honestly say that, the factor of them being scared because, okay, a lot of people don't like to talk about money to other people. So that's one of the major hiccups. I faced it, and I'm sure a lot of people who are in the space have faced it at one point in time. You're going to sit down and talk to somebody about, hey, I have this opportunity. I need, this is how you can jump into it, $50,000. And a lot of people are not just going to hand someone $50,000 or whatever the case may be because you have a great opportunity. Secondly, I think a lot of people get, especially the newcomers, there's that fear factor where it's like, okay, $1 million property, how do I get it? So I think it goes back to, on what David, I presume he said, which is the knowledge part. A lot of people don't really realize that, okay, it's not easy to get into syndication, but it's not as hard as a lot of people think it is. I think is that mindset where, okay, you can do it, but how do I go about doing so? So that's what I'm seeing with a lot of people, especially when I'm, prospecting with a lot of people I'm talking to, and they're looking to get into the space that once you tell them about syndications, their eyes widen up like, how can I buy, a $20 million building and I don't have a penny to my name? So it falls back on the education and really connecting with the right people that you can leverage, but you have to bring something to the table for sure.
I definitely go ahead.
Oh, I was just going to say, this is news to me because I thought everybody should get paid. Everybody in my circle should be paid. That's all I know. So I guess it's good to just be reminded that the world is much bigger than my small circle. And there's a lot of people who don't even know the name of it. like the word syndication, and I know somebody else said too, it's all about having the right team. I think, and Mark hit on it too, is the team and the knowledge. Those are like the major things. And it's mindset ultimately, because if you don't trust people, you don't want to partner because you don't trust anybody, you want to do everything yourself. That's a mindset, that's a limiting mindset belief that's going to keep you from growing, because if you want to go further, you need to have a team. And yeah, don't just jump into bed with communication with somebody. Like, you need to know people, but that's why you need to come to networking events like this. That's why you need to be on phone calls. So you can get to know people's personalities, and then you can feel comfortable and you can trust partnering with people who know what they're doing. So you don't end up partnering with somebody who's a douchebag and just steals your money, right? That's what everybody's scared of, right?
Yeah.
So I think it's just a combination of all those factors, but I guess ultimately it starts with mindset.
So
I mean, if I sorry, let me add this on as well. If you really look at it, a lot of people that are jumping into the space tend to be people who come from the single family realm, and that's a one-man band. So a lot of these guys are, especially if they're new to, again, if they're new to the space and they're transitioning, they're coming with the mindset that, okay, I can probably do this on my own because I did single families for so many years by myself. So why do I need someone else to help me get over that hump? And trust me, I've seen it, I've heard it. And I look at these guys like, okay, you can't do it by yourself unless, you can cut that check today and buy that building by yourself. Then you're gonna need a team together. You're gonna need to put a team together. So I think it's a combo of everything that everyone is saying. But again, it's really subjective. Like I said, a lot of people will come with the mindset that, hey, I can do this by myself. I can raise the money by myself, or I can take this building down by myself. And in all honesty, you can't unless you're filthy rich.
So I think when you guys open up was, and what's up, Bud, and welcome, and Senso and Bud, you guys can unmute and chime in, Pearl as well. Is it fear, with things? Because and Bud, I see how clean shaven you are, so I got to tell you like that. But I've heard fear a couple of times, and I know that it is scary to do something new. One of the most scariest things that somebody can do is public speaking. And I understand that when you hear horror stories of people taking people's money and things like that, that even heightens that awareness of, I don't know about joining, but how can you, but is it fear? I mean, have you seen people won't want to do it, want to have control of everything because they're fearful of others? Have you guys seen that? Senso, Hurl, Bud, with syndication?
I could say that fear is definitely prevalent. When you guys hit it, I think on the head when you said lack of knowledge. If you're knowledgeable about the subject, it greatly diminishes your level of fear. So that whole basis of education and partnering, but not just partnering, but partnering effectively. And I think that there's a huge difference in that. And I think Nicole may have mentioned that briefly, like, you don't just want to grab some douchebag, but partnering effectively is a real skill. And I think that, for my parents, they said, hey, Harold, make sure you go to college. And they said, hey, I support you, start your own business. And they said, be an entrepreneur. But it fell short of partner effectively, because once you start to grow with your entrepreneurial business, as you mentioned, as Mark mentioned, you can't do it by yourself. So that's a skill set. And I think that's where we fall short in understanding how to embrace that. I think, and then the mistrust comes from just not knowing, just not knowing business as a whole and how to bring in partners in an effective way, which I think that's taught in some cultures at the dinner table.
Can I chime in?
Yeah, please.
So, so I'm from Toronto and I've been engaged in single family homes only. So the first time, actually, this is my second meetup where I'm getting to know about syndications. So as Nicole was saying, somebody who didn't know about syndications, that's me. right? Because I did not know anything about it 2 to 3 weeks back, and I still lack a lot of knowledge in this area. How does it work? It doesn't have to be, this whole entire call doesn't have to be about me, but if somebody can give me a high level walkthrough. Uh, and another thing is another thing why people don't get into syndications, it could be the credibility issue, because I don't know who is running the show, right? I don't know what the results they brought in the past, right? So probably that could be one of the reasons as well. Yeah.
Anybody want to
So
chime in? Bud? Cinto?
yeah, that's somebody who is coming new to this, and yeah.
I'm pretty new too. Exactly what is a syndication and how does it work? Is what I'm hearing.
Anybody want to chime in? Go ahead, buddy.
Got it.
Go ahead.
Since I teach this stuff now, syndication deal is where people get together and they combine their money to buy a commercial multifamily property. You can do it in multiple ways. Either you're an accredited investor. Accredited investor is someone who has net assets in excess of $1 million or makes combined $350,000 with a spouse or $250,000 alone. That is becomes a security when you all pull your money. And if you're an accredited investor, you don't have to be friends. You're just able to go out and solicit that money. You can all buy a commercial multifamily property together. That is a syndication deal. Another syndication deal is, I'm sorry. I am a multifamily guy. So when I say, as Mark so eloquently pointed
I
out,
got
hey,
you.
stupid, you're saying the word multifamily. It's any commercial property. So I apologize. The other thing is sophisticated investors. That's a group of individuals who know each other, have built up a relationship. They have an expected amount of understanding of real estate risk. They can also invest in securities together through syndication, and they can buy commercial properties. How about that one, Mark? I got it right. Commercial properties as well. Okay. That is what syndication is. It is basically just an investment pool of putting your money together. The third way to do it is to joint venture, which is something that I do a lot. Joint venture gets you out of the SEC views and keeps you out of trouble with the federal government. So if 2 or 3 people that you know pretty well or don't know at all, but you kind of hang around in the same places, you can all get together and then pull your money together. This is where it gets different though. You all have voting ability within the corporation. You're all partners and you are now jointly connected to that. Now that can be as simple as, hey, we all attend a Zoom class or Zoom call once every quarter. Okay. And then we make statements during that Zoom call and tell the managing member, which would be me, we like it or we don't like it. Okay. Now, if I and one other individual say, yeah, I appreciate that, but that's not the way we're going with this. We're going with this way, and that's in the meeting notes. Then I'm the controlling member, and we're good to go. Okay, they're the 3 things that you can do to kind of do the combined purchase of commercial property.
So in a syndication, person who is investing, he doesn't own any of the property, right? He's just an investor and looking for a passive income.
Okay.
But in a JV, you own equity on the property, right?
In all of them, you own equity in the property.
Okay.
You are a member of the company.
Because Mark mentioned there is no penny in your name, right? You made that statement a few minutes back. So
you have. Go ahead, Mark.
My statement was, if someone who is looking to syndicate and they don't have a penny, meaning they have $0 to their name, and they're looking at a building that is $10 million, they're probably scared and looking at it like, how the heck can I buy this? That's what I was alluding to.
Oh, okay. I'm sorry, I misheard it.
In that case, I would be the guy with no penny to my name trying to get that $10 million building. So with that, that's going to be my contribution. So right now, I have a 4-unit, and some single family in the city. I'm flipping a single family right now in the suburbs of Chicago, and we have a duplex and a single family in Fort Myers, Florida. So kind of well versed in real estate. I have people on my team that are connected to, big time syndicators, and they've owned the deal directly and whatnot. However, I'm doing these flips to build up the income to partner in to a syndication, to fund a syndication. So for me, it's always been not the know-how or knowledge. I've fortunately been able to have that, or have people who are quite experts or have connections to SEC lawyers and whatnot. We have the resources. It's just a matter of, how do I get this 25K? I'm fortunate enough to have a W-2 income, but that's never guaranteed tomorrow, right? It's always this fear that, every Friday, it's a real fear I have. I never shared this. Every Friday comes, you could be doing the best at your job, but guess what? You can be replaced. The moment you're gone from this earth, hey, you've been in a company for X amount of years, done your best, but you will be replaced the X amount of hours after that. So I always have this fear every Friday for some reason. That, you know what, it's going to be my last day. That's why I've especially gotten into real estate this past year. All these deals that I'm talking about within the past, the single families within the past year, and the multifamily within the past couple of years. So I've been slowly just trying to build up this income with my partners to invest in syndications, and I'm still learning. I attend at least 5 or 6 meetups a week. I mean, Aaron sees me at all of them. It's always my fear of, I need to build up this cash because I don't have it to invest in syndication. Does that make sense?
Yeah. I have a clarification question for Bud, and that is that I always thought that syndications would involve the pooling of money to go after a deal, and that it was that joint ventures or limited partnerships were actually a different approach and weren't under the classification of syndications. Is joint venturing and partnering a syndication?
I was under the same impression as you, that a joint venture is not technically a syndication.
It is not. It is a partnership, but you can take down the same types of properties, smaller. I mean, heck, 2 people can buy the Flyers. Guy just did it and bought the, what did he buy? Whatever. It was the Devils, I think. 2 guys got together and did that and bought that. Sorry, guys, I got to take this call.
Yeah, I also think what I was gonna say, in a joint venture, I don't know why I have the impression that everybody has to have an active role in it. I don't know if anybody else, I know he's on the call, but I don't know if anybody else can verify that or not.
I think it's a joint venture is a partnership, and you can have a general partnership in which everybody is a general partner with voting rights, etc. And you can have a partnership that is a limited partnership, in which case your main funders can have can be without management control. Okay. and can have limited liability.
Okay, all right. Thank you.
Did you say all 3 of them can have limited partners? I'm sorry, I didn't catch it.
Yeah, all 3 of them can have limited partners depending on how you set up the JV, how he was saying, yeah.
Yeah, okay.
Yeah.
Interesting, because doesn't it fall under, if there is a limited partner and they don't have any active role in it, that automatically stipulates a syndication?
I think if it's over like a certain number of people, and I don't know if that number of people is clearly defined. So people push the limits with that, but I believe, I mean, there's just like no clear definition. It's kind of vague, but I guess attorneys kind of suggest 3, 4, maybe 5 people. I don't know what the number is.
I believe that a joint venture is 2 or more people. And even with syndication or under a private placement memorandum, I think you can have up to 29 non-accredited investors on that. I'm not certain, but I think you can do that. So there's some flexibility.
25.
But is it 29?
25.
25. Yeah, so.
But that's on a syndication, not a joint venture, right?
Right.
Once you
So-
get to that many people, it wouldn't be a
venture.
JV anymore.
Right.
But the
The
point is
joint venture
that,
is simply a document that says me and this person are going to do something together, right? Whether or not if you file it with the state, right? If you file something with the state, then that can become an LLC. There's also something called the tenants in common, which, everyone has equal share of ownership. I would just say that, if you go and get Gene Tobridge's book, It's a Whole Different Business, he lays out every single way that you can actually raise money for asset purchases, whether or not if it's going to be all of the different structures, how to structure it, etc., so that you can move forward. It's not a very easy book to read because it's probably 75% legalese, but he gives you the structure that you need to create if you're going to move in that direction.
Can you say the name of the book and the author again?
His name is Gene Tobridge, and the name of the book is, let me just make sure that I'm getting it correctly, but it's a whole new business. Gene Tobridge, and Gene Tobridge has like he's an attorney. He's also a CCIM, and he basically goes into what is a 506B versus a 506C. But I would also recommend, if you're going to be raising capital, right? There's a lady named Kim Lisa Taylor who runs Syndicate LLC, Syndicate Attorneys LLC. And she has a book called How to Legally Raise Private Money.
I was just going to ask if Kim had a book.
Yeah, she
Great.
does.
It's a really good book because, well, you know that there's been recent changes to what is an accredited investor.
Yeah.
There's recent changes to that, but that book will basically give you the foundation that you can use if you're going to raise capital.
And that, again, that is how to raise private money?
Legally.
How to legally raise private money. I'm gonna put the link in the Amazon link into the chat so that you guys can go in there and see it for yourself.
And if you go to her site, if you go to syndicationattorneys.com, syndicationattorneyspro.com, you will it's a way to download a book for free.
Yeah.
Kim will be a guest speaker at a later time. I was trying to get her last year, but we had some miscommunication, but she'll be a guest speaker. But she's been on many she's been on many people's meetup and podcasts, and she has her own podcast as well. I listen to it. It's a monthly seminar that she does, and she has some great guest speakers on there. Let me get it real quick for you.
Well, I think Vinky, we all know Vinky.
Yeah,
right?
Vinky
She had someone on earlier.
That was her. That was
Okay,
Kim.
right before
Kim.
your
Yep.
show at 6,
Yep.
she had a syndication attorney, and that's
Yep.
Kim.
Yep. So
Okay.
so if you go to her podcast, is Raise Private Money Legally for Real Estate with Kim Lisa Taylor. So we want to see that, listen to that
Yep.
podcast.
I knew when she mentioned that name.
Yeah, she has some great guests on there. I listen to mostly all her episodes, and she shares a lot of great information. So if you guys want to learn more.
Well, the last book that I'll give you guys is this is the one that got me started in this business. It's called Raising Capital for Real Estate by Hunter Thompson. That's my Bible. That's my Bible when it comes to raising capital, because he basically, there's 300 and something pages inside of that book of just nothing but good information on how to raise capital. There's 2 different pieces. You want to avoid the SEC, and there's a SEC at the state level, and there's also an SEC at the level. the one thing that you have to know is that the SECs are usually self-funding by penalties. So when they come calling, you have to lawyer up, because you basically can get an orange jumpsuit if you raise capital incorrectly.
Absolutely. Absolutely.
Is
You
there
got-
a? Oh, sorry to interrupt.
Well, all I was going to say is very important when you're doing a syndication to have a good syndication attorney to be part of it.
Yeah.
It's very, very important. Don't have a regular attorney do it. Make sure that they are a credentialed syndication attorney, because it can be a major difference, and it gets you in out of a lot of trouble. Go ahead, Cinto.
Oh, it's so funny. Like, we're talking about attorney, because I'm now familiar with all these attorneys. Just this week alone, Trowbridge, all of them have been brought up. Somebody was asking me privately. Was there? I just sorry. It's been a busy day. Was there a podcast mentioned that was relevant to what we're just talking about? The name of the podcast?
Yes. Raise Private Money Legally for Real Estate with Kim Lisa Taylor.
Okay. Whoever asked me that question, does that hopefully that answers your question? I was just asking for somebody.
Yeah, and her she just had an episode February 10th with Rod Khalif on there.
Rod Khalif, yeah. He's big in Dallas, right?
Yeah, so that was her last episode, but she has it every month. And it's really good. It's really good. I can give you guys a couple episodes where she just breaks down what a syndication is. Let's see. Go to it.
And if you just Google her on like YouTube, or just Google her and Google, you know, like you see so many podcasts that she's been on. She's always giving information.
Yeah, if you go to episode E2, S1 E2, how to structure a real estate syndicate. That tells you A to Z how to do it.
I say go to the book. Go to the book, highlight the pages, dovetail them, do all of the things. I say go and get it on a Kindle, because you could always do the search and quickly find what it is that you need. But I've raised a lot of money, and these are the books that I use.
Yeah, if you go to page, what is it?
Which book did Nicole just finish reading?
Was it Hunter Thompson?
The Hunter Thomas book that you just talked about.
It's fire, isn't it?
It's very clear. And you know what? It's funny. It's like, it's a lot of things that you feel like you know, but the way he lays it out just gives you really a roadmap and a framework for it that just makes it more clear. Like, oh, I am supposed to be doing that. Oh, I am supposed to be, going to these meetups and meeting people, and just all the explanations and the charts and stuff. It's just really clear the way he wrote it. I like it.
The thing about it is I got to this at the Best Ever Conference, and I have 2 pages here that I have flips on. And in the first one, in chapter 14, I'm sitting in chapter 14, right? How to be compensated for raising money, because there's no reason to raise money if you're not going to be compensated, right? So chapter 14 basically lays out in probably 7 pages how it is that you could actually raise capital. Either you partner up with an operator, right? Otherwise, you have to go and tie yourself to a broker dealer, or you have to go and become a registered investment advisor. If you're raising capital outside of those 3 ways, you are putting yourself at risk.
And I would say this too, Lee. Not only does Hunter has his own podcast, and one of his guest speakers was Kim Lisa Taylor, and they really had a great episode. It was early last year that they had a great episode together. But I definitely agree with what you're saying, because I had the same book. I read Hunter's and Mac Furclav's and Kim Lisa Taylor's, so I definitely agree with you on about Hunter's book.
Yeah, I have Max right here. I need to read that next. I didn't get to it. Still in the book.
The only thing that gives Kim a little bit extra weight is that she is an attorney, right? Hunter has the experience of how the different ways to do it, but Kim is the one who's going to give you that legalese. But even everything that she says on a podcast, you can't hold her liable for it because she's not your attorney.
Right.
So one of the things that I do when I open up my meetups is I always say that I'm not an attorney, I'm not a financial advisor, and I am definitely not your lawyer or your financial advisor. So seek professional counsel whenever you're about to move into a financial position. It just makes sense.
Yeah, I definitely agree with you on that one. And yeah, and if you guys want to have a free consultation with Kim, she will do that for free for you. So if you go to syndicationattorneyspro.com, you can have a free, I think what, 30-minute call with either Kim or on other attorneys as well. Wow, we really promoting her, aren't we, Lee?
No, hey, you do like, you know, if you do a cost segregation, you call Jonas, right?
Right.
They put their name out there so that, you know, during these events, when you're having this type of conversation, you bring their names to bear. Like right now, I'm reading that book, Best in Class, because hey, the more assets I get to, I want to know how to manage those. Right. And the book is really good.
Right. Absolutely. Hey, Neil, man, it's good to see you on here, man. You have anything to add?
No, I'm just listening. I'm working at the same time, so I'm kind of out of pocket a little bit, but I'm hearing what I can.
Okay.
Appreciate it.
No problem. David, or you have any more questions? Anything like that?
I thought Marc Cesar was preaching the gospel. He's kind of quiet.
You guys are having a good time talking, so I'm listening.
And he doesn't like that I call him by his full name, but
he doesn't.
Listen,
he doesn't.
Don't listen to Lee, man.
Render to Caesar what is Caesar's. That's all you got.
My man Robert Aragoni, got anything to add?
Now on syndication, I get calls on people trying to buy properties, and they're syndicating and they want to know about the loan aspect. So I come in on that avenue, getting the loan and the mortgage part of it, and I leave it up to their team with raising capital and going through all that part of it. So that's what I try to add to it. I put together a loan to get you the highest LTV, and then you raise your rest of the capital, and we can make it happen. So I've come across those opportunities.
So if you could, from the lending side, has there been any stories you can add on to it about a syndication that maybe went good or bad?
I just had one last week, 2 weeks ago, actually, a few properties in Arkansas. And these were multifamilies, mixed use. And they were coming in about under 2 million. And, I started asking for the documents I need, the rent roll, T12, and application. And, my job is to get that term sheet, LOI, out to the investors to see if everything makes sense. And I just could not get them to give me a bio. My lenders were asking, who are these folks? You got to give me a bio on a little bit about you, your experience, things like that. It kind of came to a screeching halt. But I had many lenders interested because we seen the, the OM, the T12 and the rent roll and everything looked good. So that's where it came to a halt. And sometimes I come across those type of investors. Just not ready.
Robert,
not ready, they're not prepared.
Your clients to know when someone is serious from when they're not. I guess you're in the broker space.
Of course.
a whole bunch of lenders, right? So if I come to you, right, I'm sure you're not going to just look at the T12, right, the rent roll and the what is that? The bio, right? When do you start running credit? Do you need the bios of just the people who are going to be guaranteeing the loan, or do you need the entire team?
Yeah, just the two, maybe two main guarantees of the loan. That's what we need. And then for me to feel people out, it's just a conversation, you know, to kind of answer your question, see if they're qualified is, you know, do they have any down payment money ready?
Yeah.
To the date? That's very important, because a lot of times deals go south because they have nothing to bring and they think they're going to get 90-95% loan. Like, this is residential. This isn't residential. So, you know, I can go as high as sometimes 75-80% LTV, but where's the rest? Are you raising the capital, or do you have down payment money? And you got to think about the closing costs. You know, it's only a few percentage usually, closing costs, but down payment money and closing is important.
So you're looking for that risk capital that's going to go down for the EMD and all of the fees that need to come out. Are you with a bank statement? How would you like to see that as a broker?
Yeah, usually the bank statement, your business bank statement will show what's in there. And then also getting away from the bank side, but a purchase and sale agreement, even having that ready. And a lot of times I don't get that because they're not at that point yet.
Yeah.
To have that. They're just, you know, people find these properties and they want to go and purchase it, but they don't have kind of all their ducks in order. So I try to help and, you know, educate on the things my lender's going to like to see, like, you know, not just the rent roll T12, but the bank statements too, that shows you're going to bring, you know, at least 10-15% to the deal to get it to the closing table. And then experience too. Lenders always ask, they want to see, are you on the HUD on 2 or 3 previous deals? Or are you just a passive investor, which that won't chalk up to much.
But Robert, what about when you are going to be bringing on sponsors to a deal, and maybe you have a network of a couple of sponsors you could choose from, but you want to bring to them an actual like accepted LOI or purchase and sale agreement before you're asking them to like give their personal information, you know what I mean? Like, because sometimes the sponsor may want to see that this deal is actually like, it's not just fluff, because you could be putting LOIs on 30 deals that don't get accepted. So how often should you be going to your sponsor and asking them for that? You know what I mean?
Yeah, I've done that in the past where, you know, just trying to get them the investor's LOI term sheet, just to see what the numbers. But my lenders are going to need basic things also to produce this term sheet LOI, so investors can see if the numbers make sense on the financing side. So yeah, having a sponsor with, you know, experience and liquidity definitely helps.
Okay, yeah, thanks for that clarification.
But you know, one thing that we do with our company, I have a real estate finance firm, Enterprise Financial, and we basically have a plan to start with a deal summary sheet. And I found that to be for all of my investors, whether it be a trust or offshore investor or even a particular bank, the deal summary spells out on one page just that, the summary of the transaction. So you know who the partners are, you know what cash you have to work with, you know what their intentions are, what they propose their interest rate to be, what they think, what the deal looks like. It might have some small summary of the net operating income, because I think in commercial, to determine loan to value, credit's important, but net operating income is probably the driving force of that. So the deal summary sheet spells that out and allows us to set up which way we can go with the opportunities that we have with different type of investors. Saves a lot of time, and it always comes down to that, because I have deals now. I just got a hotel deal yesterday, and they've got a great executive summary. They spelled out the net operating income. They've got good pro formas. It makes sense. It's a 99-year lease deal. But the deal summary sheet, because if you think about it from an investor's perspective, they get all of these deals all the time. So no one can go through what we go through, read through the entire project, and then draw a consensus. If you have that deal summary, then you say, okay, this gets to the top of the pile. So that goes a long way. And I'm happy to send that. I may have even sent that to you before, Aaron, a copy of our deal summary, but if not, I'll send it out to you so the rest of the guys can have it and see what is available. Because to tell you the truth, with you all's talent that I can see here in this conference, even through a joint venture agreement, you may be able to come up with much less money and have a much higher combined LTV creatively with investors and corporate bonds and other ways that are kind of just outside of traditional normal guidelines for financing multifamily.
Yeah, I love what you're saying, and trust me, guys, he's gonna be a guest speaker on my meetup, so he definitely gonna break this down about that. And I think that if anybody wants some information, please get with Harold. But I want to.
Aaron, I'm gonna need you to send me that executive summary.
All right. Well, I'll get you. I'll have Harold email me, and I'll email you, and then we connect y'all too. And great gems on Friday. I mean, last Friday as well, Nicole. Once again.
Thank you. Appreciate it.
That was hosted by my main man, Marc Cesar, No BS podcast as well.
You don't know how much Mark had to go through behind the scenes to get 4 Black women on the same schedule.
Well, I know one person is pretty difficult to get a hold of, so I'm not gonna. I won't go that farther than that. Mark know what I'm talking about. So
no, it was difficult all across the board.
No.
Oh,
I'm talking about you. I can text you. Others.
Yeah.
Yeah. But I want to thank you guys. This has been a great conversation. I'm not ending this right now, but I don't want to say thank you guys for your inputs. But let's try to finish this off. What we think can alleviate people's minds, ease people's minds as far as, I think number one is education. The more you educate yourself, the better. But is there anything else that people who have done syndication can ease people who are a little bit apprehensive about syndicating? Go ahead, Cinto, so you raise your hand.
I'm just gonna talk from the nerdy tech perspective. Okay. It's about project management. I'm just gonna speak in that, and I apologize for getting nerdy. For me, what's helped me is I'm a visual learner, and for me, it's just a matter of where the source of my knowledge comes from. I'm fortunate enough that people like Aaron and Larry, they all these meetups, but we touched on this a little bit like 2 segments ago, I think, with Lee and Aaron, you were there. We talked about mergers, right? Sometimes if all these tribes get together, what's called a federation, and they focus on people, there's power in just merging. And then for a week straight, I just envision like a series of classes, like, hey, on Monday, day 1, we'll be talking about this of syndication. Day 2, we'll be talking about this in syndication. Day 3, day 4, day 5, kind of like a virtual conference free, but it would just be a merge of all these meetups, Aaron, Larry, Yona, all these people. And it would, I mean, when you talk about that, you've got hundreds and almost up to 1,000 plus people in 2nd and 3rd degree connection. They'll be like, hey, this event's going on in the middle of April. We're going to learn all about syndication. I feel like the more people promote that, it can be like the online version of the best. I mean, these past 2 weeks, I've heard nothing about best ever, best ever. I'm like, what the heck's the best ever? You know? So if we just did that in terms of like online education, hey, people like, you know, me and Bear and those who, you know, don't know as much, they would just naturally gravitate towards that. There's information out there. Remember, we all know that there's so much knowledge out there. It's just a matter of putting it in one funnel. You know what I mean? And since all these tribes are interconnected, it would do a lot of great, you know, service and benefit to people who don't know. And plus, there's always somebody we know that doesn't come to these meetups. So if we all just bring one person, you know, if there's 1,000 people attending it, it'll be 2,000. You know what I mean? So that's just my thought. Aaron's shaking his head.
I got a phone call, so I'm just, somebody hit me up and I got a phone call. So I'm
Oh, okay. I thought you were vehemently disagreeing with me, but okay. That's just my thought. Just putting all the knowledge out there in one clean, organized way. And if we all combine our knowledge and resources and time together, it would benefit. That's all.
Isn't that the principle behind GOB, to democratize what this thing is called commercial real estate and multifamily investing? Because quite often, well, too often, people are spending $30,000, $40,000, $50,000 on these coaches, and they're still walking away without having a deal, right? So the one thing that I would add is yes, knowledge is always going to be there, but this thing is so massive. Like, there's the financing piece of it, there's the acquisition piece of it, there's the disposition piece of it, there's the refinancing piece of it, that you can't learn all of this in one setting. There's people who have been doing this for 10, 15, 20 years. They're still learning it. They're still learning the game because it's just changing so much. The one advice that I would give is invest in a syndication, right? Find a good operator and go and invest with them. That gives you the opportunity to not only understand what they're doing and how they treat their investors, right? But you get to read that PPM, right? And the PPM is no fun reading. If you've ever read a full PPM, you get to learn how the business is going to work, how they're going to structure the LLC, how they're going to structure the management side of it, how often they're going to send out distributions, and all of those things. Literally, before I got access to a GP, I invested in 20 different syndications. And probably before that, I read about 100 different PPMs before I invested in my first deal. My first deal was on Realty Shares. And I just used to go to Realty Shares so that I could read PPMs and understand the structure. So I would just add that little bit of advice. It's always good to watch the game, but it's a whole different game once you get in the game. And you can make some money too, if you find a good operator.
Does everybody know what PPM is?
A private placement memorandum.
Memorandum.
Beer, do you know what it is?
A little bit, as in it could, lays out the details about the offer, right? Like what's gonna be in the deal, right?
It lays out everything about, because these syndications, so we started out the conversation about talking about JVs, right? And if you're probably going to pick up a small multifamily, 10, 15, 20 units, depending on where you are, you can take that down with just a group of people who know each other. You don't have to get very formal, right? But if you're going to start taking down 50 units, 100 units, 200 units, 300 units, you're going to have to raise capital in order to get there, right? So that's where the big boys are playing, right? Big girls are playing too, right? Is when they're going over 100 doors and they're having to, raise $10 million in order to take down that acquisition, right? Now, you have to understand what the SEC is talking about. You can do a JV for a $40 million project. It's just that you're going to have to JV and have 5 people bring $10 million into it. But you can do it. But what happens is, this thing all works by having smaller investors come into your deal. And the bargain that you have is that I'm going to take care of your money. I'm going to try to double your money in 5 years. And to keep you happy during that 5-year hold, I'm going to send you some money every quarter or every month. That's the deal that you make. And if you find an operator who has a track record of, keeping their word, you give them a try, but you don't put everything into them, right? I went with probably 10 different syndicators so that I could understand how they operate. And there's a couple people, I won't name them here, but I will never invest with them ever again. But there are a couple of syndicators like, passiveinvesting.com. I will invest with those guys all day, every day. I would invest with Joe Fairless and Ashcroft Capital all day, every day.
So how do you get the credibility of the operator? How do you get their previous deals and how did they perform?
Each one of the big ones have investor relations departments, and you go and you talk to them, and Google is a very powerful tool, right? You go and search them, always search for reviews. But I would say more so your network would have people who have invested with those folks before, and have that honest conversation with those other people as to what this is. Like, look at, you have how many people? 10 people on this call right now. Many of us have already invested in the different syndication. You just go on different meetups and say, well, who have you invested with and what was your experience? Now, of course, past experience is no guarantee for future results, but that's a starting place, right? The first time I had to send $50,000 to somebody, I was nervous. I bit my fingernails and all of that. And I thought I did as much searching as I could, right? But eventually I said, you know what? I've done enough investigation of this person, and I sent that $50,000. Guess what? That $50,000 in 2 years, 25 months, turned into like 90 something thousand dollars when they sent it back. 2 years. But that's during this time, right? So during this time, it's a different, and I don't think that this type of time will ever happen again. The last pandemic before this one was in 1918. So it's probably going to be another 100 years before we get another pandemic. However, the rental situation is in such high demand that, you can be a bad operator and still make money in this market because there's such high demand for real estate, multifamily in particular, right? So I would say, just do your due diligence, talk to people like me, talk to people like Marc Cesar, talk to people like Cinto, and say, what's your experience in working with these folks?
I will add on to that. I think I mentioned that book in the chat. Very great, but I'm actually reading it now. It's The Hands-Off Investor by Brian Burke. That book is truly amazing. It gives you the perspective of how passive investors should look at what they should look for when looking at an opportunity offered to them. So it gives you the certain questions that you should ask the investor, just to do your due diligence on them. And it also helps you understand the mind of an operator, how they run their business, how they analyze their deals and stuff like that. So that is a great book to read. I highly recommend it. And yeah, it's always good. Like, just to piggyback off Lee, it's always great to just, find referrals from people who has done it, in the past, and find those big guys. There's probably, other individuals within that network that has worked with them. So you'll just ask them, hey, how was it, investing with this person? How was it investing with Joe Fairless? Like, did you get your money back in time? Was it constant communication? Did they share, were they transparent with the information as far as, okay, when something went bad, did they call you and have that conversation with you, let you know, hey, this went bad? Or did they, you know, just drop off the map? So you want to ask questions like that to understand the mind of that investor and make sure that, you know, your investment is safe. Because again, I run a podcast that talks about all the scary stories in real estate investing. So I just want to throw that shameless plug out there. I hear the stories. I hear people, you know, I talk to a guy right now, he's bleeding $20,000 for the last 3 years, every month for the last 3 years on a bad deal because he partnered up with a bad sponsor. And yeah, you know, so things like that, you want to vet people
No. How much is that?
$20,000 every month for the last 3 years.
He's lost $750,000 already.
Yeah.
He got into
walk away from an investment like that.
He's tied into it. He has his money tied into the deal. And the sponsor is kind of a under the table kind of guy. Go listen to the podcast. It's
yeah, yeah, there you go. There you go. There you go.
Podcast. I don't want to
go.
Story, man.
There you
Come
go.
on.
No, but I don't care how much money he got tied into it. He needs to get out so he don't keep losing money. Like, is that a joint venture? Is he the only one who funded the deal? I don't get it.
Yeah, unless he's writing it off.
It's a sticky situation. It's a sticky situation, so he can't just get out of it. I mean, they're going back and forth in court to this point,
now
but
you got lawyers too, so that's not including the 20,000.
It's a sticky situation, so you'd have to listen to.
Ain't no situation that sticky. I'm getting out of there. Out.
Nicole, I saw you with the little one. Go ahead. I know you want to have something to add on.
What, to the conversation? I mean, I do have actually an experience with an operator who I won't invest with again passively, but and it's funny. It's because it just depends on where your values are and what you expect communication wise. I think Mark said something about communication, and that's extremely important. And that's important for me. I love communication, and I over communicate with anyone whenever I'm doing anything. That's why I talk so much. That's why my posts are so long, because I like to over communicate. I don't want anybody saying that I didn't tell you something, right? So with this operator, yes, we got all the projected returns. They met all the deadlines, probably even exceeded a little bit. I had looked at some of their past deals, so I knew their experience in the market and, you know, that they had some credibility there. But investing in it, like, they just did not communicate well at all. Like, even if something like, and I understand real estate, like I understand things happen, but if something happens and you make a decision that's opposite of what you told us that was going to happen, you need to at least send an email to everybody so we know what's going on. I shouldn't have to email you and ask you what's happening, right? Like, I mean, yeah, and that's me being like involved in real estate and knowing that, you know, real estate is not always cut and dry and things happen. And so I'm understanding. I think most investors, passive even, would be super understanding, but you just have to communicate information with people. So we're in contract to sell. They're selling it next month. And they were asking people if you want to roll it in 1031 or you want it out, blah, blah, blah. And I'm just like, give me my money back, because I'm gonna put that in something else. And I don't care about the cap gains, because if I buy more property this year, I can offset the cap gains. So, and I'm already in process of doing that. So I just want my little bit of money. And it was my first syndication to invest in passively. And I didn't have enough capital to do 10 syndications as like a, you know, proof of concept or to learn who the operators and stuff like that. But I just think everybody should just start with what you have and don't let not being able to do a lot keep you from doing a little. Just get started.
Get off the bench.
Yeah.
Love it. Love the conversation. Love the
No,
conversation.
but also to Nicole's point, you probably have accrued losses that will offset whatever money you get back when they sell the property. So it's probably going to be a wash, right?
Yeah, probably. Yeah. So you know what? And it's small, because I started off, I'll tell you guys, it was just a 25K investment, right? That's what I had. So that's what I started with. And so, yeah, it's like a 2.05 equity multiple by the time of the sale. so even with what I'm walking away with, I'm still walking away in what I've already gotten back. It's still not that big of a gains liability. And so I can easily offset it because I just have more money to throw into other deals from other sources now. Because things just like, as you get into the game, things just start escalating and they compound and you get momentum. And so I'm not even worried about it. I'd rather just not be tied with these guys anymore.
But how long was the hold? So you're walking away with
It's like 2 years.
2.05?
Yeah, so I like double my money in 2 years.
In
Yeah.
2 years.
Yeah. Or it's like, I'll say it's like 2.5, almost 3 actually. So,
Yeah,
but still, that's still double your money. That's crazy, right? Yeah.
A 5-year hold.
Yeah.
So your ROI just went up enormously because you were expecting the money to be out for 5 years, but now it's back to you. You can put it to work again.
Yep, exactly. Yep. So real estate is powerful.
But you got to understand how to do it. You have to understand how to do it. And that's where the educating yourself part comes into play before you jump out into the water.
You know, I have come to notice that good deals always attract money. So I can understand from the syndication perspective, but if you concentrate as a strategy to find the good deal, you probably can get a couple of LPs and you're done, especially with a good investor. With a good banker that can give you some amenable terms. It just goes back to the old days to me when we were doing 1 to 4 families, all of us have, I'm sure, and you knew how to get seller cooperation and it can make the deal completely different and you can make it happen. And so those are good deals that we were able to do with limited funds on a smaller level. The same principles hold true to me in larger commercial deals. They're just as sexy to investors, but you got to do the work in finding a sweet one. And sometimes you have to go through 100 to find the good one. And I think that's where you'll, especially with your experience curve now, especially those of you who've been through a few syndications, if you find a deal and become the principal driver on that deal, I think those profits will grow exponentially, and you'll find investors with a lot less, I won't say work because it's always work, but a lot less management of investors. It's very, very profitable. Good deals attract money every day, and there's money on the sidelines right now. If you say, I got a good deal, the NOI is there, you're going to attract the money. Just a strategy.
Now we know about writing a lot of LOIs, right, Marc Cesar? You write a lot of LOIs before you find that one.
Yeah, tell me about it. So many and all get rejected. I love it.
No,
I love the no's.
I think that equates to experience because right now the market is so hot, right? There is so much money on the sidelines. There's chasing yield that it's like upside down. But guess what? The bottom always falls out, right? The bottom will always fall out. I would say the conservative investor is going to hold on to that capital to when it does happen, right? Right now with the Ukraine thing and crude oil, gas is going to go up. The market is already in correction territory. It could go into recession territory. Those people who got into those deals, right, Rob, at an 80% LTV, 85% LTV, they're not going to be able to hold on to those assets.
There's always that, there's always that, like you have in your title, value add. I think that's the key, is to find value added situations. And that's where the margin is. So you do the work to find something undervalued. You have to have a little bit of an eye. So it's between evaluation of risk and evaluation of value of the asset. So once you get that eye, you can find that golden, just needs a little polishing of the apple, and it has happened in COVID. I got a deal today in Midtown. The investors it's 78% occupied. Traditionally, it's 94% occupied, but they took some hits. It needs a little bit of work. It needs a new roof, just like the stuff we did in the old days. But, it's a $400 million purchase, and it's going to attract the investors because they're getting it undervalued. $1 billion per square foot is worth $600 million, but it needs the work. It needs the tender care. It needs the eye. And so that guy came to me for the investment, and I said, yeah, I think we can make this happen because good deals attract money.
That's why I named my company Value Investment Partners, is
I saw
because
that.
whenever you can determine value, and I think what happens to the persons coming into this, they don't know how to determine value. And this is the reason why I got out of single family, is because with single family, I can't force appreciate the asset, right? I got to wait for the market to do whatever it's going to do.
That's right.
But
That's
if
right.
I can come in with a multifamily and I can do valet trash, right? If I can come in and I can implement a rub system, all of those things are value opportunities. Even if I have a parking lot and I can assign parking and get people to pay for that, that adds value. So
washer dryer machines,
washer dryers. So Wi-Fi, Gigafy, right, inside of the complex. Any of those things that I can do to increase the NOI, I'm adding value. That's why there's value all over. It's just that, you know, for instance, would you purchase a Class C asset at a 4 cap?
No.
That makes no sense today. No. Because I can go and buy a Class A at a 4 cap and don't have to worry about the maintenance and all of these things going wrong. But you see today, people are purchasing a Class C asset at a 4 cap and thinking that they have a deal.
No. Not a lot of room there. I like that. We learned a lot from 2008. Most of us have anyway. And distressed assets is a skill. And that's where I think the meat is. That's where the gold is. And looking at that beat up property, even but on a commercial level, a little sharper eye. And net operating income drives all of that. Not credit as much. NOI is the game. So you know, please, you guys give me a call. Let's run through some scenarios. Creative financing is there because once you bring in alternative methods of financing, you increase your loan to value ratios. You increase your equity opportunities, you expand your horizons. And, you know, I've been in the business since 1989, and I thought, you know, that I knew a lot about banking. I became licensed in 8 states, and it's true. You know, we learned how to manipulate the system in the US because we've been here and you guys are all smart guys, but I did learn there's a big world out there. There are other areas, there are other countries, there are London. People work with finance in ways we're just not familiar with, that are just as registered, that are just as safe, just as effective. Offshore investors love America. So you pull in the right deal, you can get an offshore investor to be your equity guy. And it makes things a lot simpler, especially as we step up to larger properties.
Well, hey, look, guys, I just want to say I'm gonna end the meetup on here. Doesn't mean that we're in the conversation, but I just want to say thank you. Thank you to my main man, Marc Cesar, for being a co-host. Thank you everyone for being great panelists on here. I see you, David. And I just want to say thank you guys for another great episode. We will see you next week. God bless you.